Hey everybody, and welcome. Your host Superman, and we're going to have a look at the economic calendar for the United States in August 2022. Obviously, in the month ahead, see some of the key economic indicators. Now, obviously, these can impact exchange rates, particularly US dollar, and of course, they can also impact the stock market and crypto market indirectly as well. So we're going to check this out. Hopefully, it's going to be interesting. Now, obviously, if you're looking to buy and trade and things like this, this is the sort of things you should know what are coming up, so don't get taken off by surprise. So let's have a look at what's coming up. These are the most high-ranking important indicators, and of course, there are other ones which are of lower impact importance. So these are the high-impact indicators coming up for the month of August. So keep them in your calendar. So we've got obviously coming up on 1st of August here, we've got the ISM Manufacturing PMI Index. So that is pretty much a survey of 400 industrial firms in the United States. So producers manufacturing index there. And of course, the forecast is 52. The previous was 53. Obviously, if it does better than 52, it's going to be a positive sign there for the general health of the PMI. So basically, it's got a couple of different indicators in there, and just basically around manufacturing, purchasing, and things like that. So we're going to see how that comes up. Then on obviously the Tuesday there we've got the JOLTS job openings. Obviously the target is 11 million job openings in the United States, and of course if that comes in positive, then that will be bullish for consumption. Obviously that's an issue possibly for inflation. So it's kind of a double-edged sword at the moment. Previous was 11.25 million. So we'll see what the actual comes in there as well. On Wednesday the 3rd, we've got the ISM non-manufacturing PMI, so producers manufacturing index. Once again, 400 firms interviewed there for July. So that's for non-manufacturing zone. And of course, that compares to the manufacturing ones on the 1st there. So non-manufacturing coming in on the 3rd of August there. Also coming in on the same day on the 3rd is crude oil inventories. Obviously a pretty big deal there, and people often that looks to move the oil price. So at the moment, of course, the previous we had negative 0.4523 million. Obviously, if that beats the forecast, which is not there, then that will be considered, bullish if it beats it, obviously, and bearish otherwise. So that could have a possible impact on the markets. August the 4th there, Thursday, we've got initial jobless claims. And of course, previous was 256,000. We've got 255,000 there. And of course, if that beats the forecast, then that could be considered a bit of issues with the economy there. So we'll see how that goes in terms of jobless claims. All right, so let's jump on to the second page. We've got here on the 5th of August non-farm payrolls coming up. Previously, we had 372. We've got a forecast of 250. So we'll see what the actual comes in there. For non-farm payrolls, unemployment rate also coming in. So there's a big deal around employment and unemployment here, and the market will take those pretty seriously coming up on the 5th. We had previously for unemployment rate 3.6% in the United States, 3.6 is the forecast. We'll see how we get on there. Whether if there's a higher unemployment, then obviously something's going a bit awry there in the economy. That could be taken as a negative. Non-farm payrolls, of course, a higher number. We had 372,000. That was pretty high. We beat that. That's pretty bullish as well. Wednesday, August the 10th, we got now jumping from employment and unemployment to CPI or inflation. We got core CPI month on month for July, and CPI on year on year for July. Now, previously we had 9.1%. Remember, obviously that was a big deal. The market managed to just sideswipe that, and of course they've also recently sideswiped the more dovish, if you can say that, Federal Reserve as well. So far the market's sort of passing those over, and we've got a forecast of 8.9%. Obviously a pullback in inflation. We have had lower oil prices up from $120 say down to about $100 thereabouts, sometimes getting up to 110 I think at the beginning of the month. So we'll see how that comes in. 8.9%, that's a big number. So we've got two big numbers coming in there, the 5th and the 10th, and of course we have to keep an eye on that. Then, of course, on the 11th there, we've got the PPI there. I think that's the Producers Price Index one, month on month for July. And, of course, previously we had 1.1%. So this is a set of the CPI numbers, which is, the retail. This is really about, manufacturing. So it's going back what the inflation is in terms of manufacturers pass it on to their customers. So more of a wholesale point of view. And of course, that was 1.1 before, so quite high. 0.3 is the target, so an easing off of the inflation that's coming up too. We'll see what the actuals come in. Obviously, we've been also talking about on this channel about property and being one of the markets that people are going to talk more about in the future. Obviously, in an environment of inflation, higher interest rates, property building permits there in July. Previous was 1.696 million. The actual numbers 1.65 million is the forecast. We'll see how those come in. Obviously, if it's higher, bullish as well. So we'll see. All right, so let's get into the final part of the calendar for the month of August. These are the high impact indicators, by the way. There are medium and low indicators coming out that are not shown in this video. We've got Wednesday, the 7th of August, core retail sales month on month for July. Previously is 1%, and of course 0.6% is the estimate there. And then we've got retail sales also month on month for July. Obviously, this is, if people are buying, if retail sales are high and these forecasts get beat, that's very positive for the economy. Obviously, that may have a flow-on effect on inflation. However, we're kind of in that awkward phase now, moving out of low inflation. On the 18th is the final one. We've got Philadelphia Fed Manufacturing Index around manufacturing. It was down negative 0.3, so we'll see how that comes in for the numbers. And then finally, existing home sales. So related to these, the previous page where we had building permits, we've got a second indicator here for the housing market. And of course, existing home sales, we previously had 5.12 million sold. Estimate is going at 5.38 million sold for July. And of course, we'll see how that comes in. If it's higher, that's kind of bullish. If it's lower, that's kind of bearish there. Those are the key economic indicators coming up in August. Obviously, some pretty big ones there. Crude oil inventories often talked about, as you know. The initial job claims as well. The other side of it is, of course, the employment, unemployment, inflation numbers as well, and at the wholesale level. And of course, finally, a building in terms of the property market. And I mentioned people are going to talk about more about that in the future. So hope that helps schedule some of those in for your calendar if you want. Obviously, if you're trading and things like that, you do need to keep aware that we have, obviously, the market has come down from its highs. And any of these numbers sort of build up that picture of a recession type economy or economy that's moving sideways, something like that, or surprising to the upside. So that's going to impact the stock market values as well as it impacts confidence also. So I hope you enjoyed that one. Feel free to subscribe, like, share, hit the bell, and leave your comments in the video description if you want to add some extra commentary. And I look forward to seeing you in the next one. Hope you enjoyed this one. That's your host, Suitman. Bye for now. I'll catch you in the next one, and we'll see you later.